Ever heard of private equity? It drives some of the world's biggest deals and the career path that's turning heads everywhere. With salaries starting at $250,000 and increasing to $500,000 just 3 years later, it's no wonder this is the dream career for a lot of finance professionals. Welcome back to another video, and today I'm going to be talking about private equity firms. And these aren't companies that simply invest into other companies. No, these are firms which build them, grow them, and reshape entire industries. And in this video, I'll be covering what that means on a more day-to-day basis, how to work for them, the skills that they're looking for, and the salary you can expect in your first few years working as a private equity analyst. Whenever I came across people in the private equity industry, I can just see that they move differently in their mannerisms and the way they talk, their insights, knowledge, and the way they analyzed the financial landscape wanted to make you listen to them. Now, because it's such a difficult industry to break into, knowing the details about them isn't always easy to find. So let's first look at, what do private equity firms actually do? So it's actually very simple. Private equity is like a big investment club where wealthy individuals, institutions, or firms pool their money together to buy businesses with the goal of improving them and then selling them on for a profit, which could mean selling the stake in the business or have the company go public in an initial public offering where it can then sell their shares on the market. So instead of buying stocks that anyone can do, private equity focuses on investing in companies and making changes to help them grow faster or become more efficient. Think of it like flipping houses, but instead of real estate, they're flipping businesses, buying them, fixing them up, and then selling them on for more. And I could make a 15-minute explanation, but really, I'll just be wasting your time because the explanation I just gave really is it. So who are these PE firms? Well, here's a list of the top private equity firms. I wouldn't care too much about any rankings out there, but these are the familiar names in private equity that you'll be coming across when making your applications. But why do people apply to private equity when the acceptance rate is around 0.5%? Well, working in private equity can be very exciting because you're involved in big decisions that shape companies. You could help restructure a company, make important operational changes, or guide it through an acquisition. And all of those can lead to big payoffs. And don't worry, I will be talking more about those payoffs in a bit. But before that, let me explain how to get these jobs in the first place. I remember when I was applying for grad roles, I didn't see any grad programs advertised by PE firms. And that's the first point. The entry-level roles will generally go to candidates who already have 1 to 2 years of experience in investment banking. The teams at PE firms are much smaller than banks, and so they don't have an annual 500 grad intake, but rather they want their entry-level staff to already have achieved the required skill sets. So that's route one, having 1 to 2 years of investment banking experience. Now, route two is completing an MBA. I've already made a video on if I think an MBA is worth it, but for PE firms, whilst it's not compulsory, the data shows it helps significantly in landing a role. And as much as I hate to say it, the brand name matters most for private equity. You have to show that you're a winner. And when they're looking through CVs, they just care about the investment bank that you were trained at, the university you went to, how high in your class did you graduate to, did you have a top ranking at your IB? Now, there is a third path, which is where you can consult. You can come from consulting and McKinsey, BCG, or Bains, but you'll also have to have a solid grasp on something, which is a skill set you'd have easily got from the first two routes, which is your financial analysis skills. So knowing your fundamentals for private equity is key, and I don't just mean building financial models, but knowing aspects such as how to figure out revenue drivers, which will help you understand where lucrative exit opportunities can lie, to understanding operating profit margins to assess what can and can't be improved when considering investments. So whatever your background is, because of the nature of what you're going to be working on, you'll stand out if you have a strong experience in M&A or leverage finance, which is basically funding deals that involve a higher proportion of debt than normal. Numerical skills, of course, are a must, but interpersonal skills are massive here because as a junior, you'll be doing a lot of cold calling to source deals, to interacting with the businesses the PE firms have already invested in. Now, it does sound like they're really helping the companies they're investing in. After all, they're making them profitable. But there's a lot of bad press, whether that's on paper or online, about hate targeted towards private equity firms. When it comes down to it, PE firms just want the highest possible profit, and that means they will be making brutal changes from firing staff to creating additional revenue streams which may not fit with the original intentions of the business. And when these changes occur, they happen fast and they happen at scale. So I can definitely understand all of the negative press they get, but also you can't argue with the big profits they bring in for their own firms. And those big numbers lead to big salaries. So let's have a look at what your first couple of years as a private equity analyst will look like in terms of your salary. Salaries are big, and there's three main areas when it comes to PE firms. You've got your base, you've got your bonus, and lastly, the big one is carry, which is a slice of the profits on successful deals. Now, carry will only start to form a part of your salary roughly 3 years into your career and will become significantly larger as you progress. But let's look at your first couple of years in a little more detail, and I'll be doing this in US dollars as that's where the most data comes from. So first year associates' annual salary will be on a base of $135K with a bonus of roughly $120,000 to $200,000, giving you a potential salary in the range between $250,000 and $350K. Second year, you'll see your base increase to between $160,000 and $180,000, with a bonus hovering around $170,000 to $250K mark, giving you a total between $330,000 and $450K. You'll generally be on another year as an associate, and in this year, your total salary will be hitting the $500,000 mark. Now, each firm differs in their carry calculations as well as when employees begin receiving them as part of the compensation, but at some PE firms, it begins at this level, although it would be very tiny. It's only in your next few years as you progress to VP and above where carry becomes a formal part of your salary. And like I said, each firm is different, but here's an example of the carry component. Let's assume that the carry is 20%, which is a typical figure in the industry. For a fund with an AUM of $1 billion, if the investment does well and the fund's value grows to $1.5 billion over a few years, the firm will be entitled to 20% of that increase. And so the carry will amount to $100 million, which will be divisible among the senior level professionals at the fund. And like I said earlier, teams at PE firms are very small compared to investment banking, so that $100 million will be shared amongst a small group of people. And that in a nutshell is why this career is so lucrative. Not only at this stage will you be earning in excess of $500,000, but you'll be taking a slice of that $100 million as well. And I don't know about you, but that does sound pretty sweet to me. Now, like I said, the acceptance rate at private equity firms hovers around 0.5%. And before you even get there, you need to have completed an investment banking graduate program, which in itself is very competitive to get onto. But to help you here, I've made a few interview prep videos which are based off my own experience at grad roles at investment banks, which I've collated in a playlist in the description box below. But to get your prep started, I'll leave this video next to me, which I've seen a lot of candidates struggle with. So go check that out, and I'll see you all in the next video.